Is C3.ai stock a buy, a sell, or a hold? I'm going to answer that question in this video looking at the company's revenue, profits, and cash flow. Now, this company, of course, has AI in its name, and AI has been one of the most popular investing trends in 2023. So it's understandable that a lot of investors are interested in C3.ai stock. So let's find out if the stock is indeed a buy. Starting with looking at its trailing 12-month revenue, we could see revenue of 273 million in the most recent updated period. That's up slightly in the last year or so, but initially the company was demonstrating very nice revenue growth from January of 2021 all the way up to about July of 2022, and then its revenue growth kind of stopped on its tracks. And that was common for enterprise companies that sell to businesses. Businesses were fearing a recession starting in middle of 2022 all the way up until about January of 2023. There were strong fears that the increases in interest rates by the Federal Reserve were going to lead to a significant economic recession worldwide. And so enterprises started preparing for a recession, and so they cut spending wherever they could. One of the areas they cut spending is in the services that C3.ai provides enterprises. However, C3.ai has recently developed a new innovative technology that right now it's testing with several clients. Management said that those tests might turn into sales by the end of this year. So the way their sales process works is they go out and they show their clients what they can do. And once clients see the demonstration, which typically takes several months, then clients say, all right, you know what, let's make a deal for this service longer term. And so right now it's in that trial phase. That new technology is in the trial phases with several clients, and management is hoping and expecting that these will turn into long-term contracts starting the end of this year. That being said, C3.ai has not done a good job improving its profitability with revenue growth. I just showed you how its revenue has grown significantly over the last 3 years. However, that's only led to bigger losses on the bottom line. It's heading in the wrong direction. You'll often hear me say that I'm okay with growth companies having negative profit margins so long as they're demonstrating progress towards profitability. C3.ai is moving in the opposite direction. It's not demonstrating progress towards profitability, and it's significantly negative at negative 106.4% operating profit margin. Thankfully, its cash flow from operations over the trailing 12 months has turned upward. It's still negative, but at least it's demonstrating progress towards being positive. You could see it too was moving in the wrong direction quickly, negative 160 million at the peak of its losses, but now for 2 straight periods, it's improved down to negative 73.5 million. So this is good news. I would like to see more progress from C3.ai continuing this upward trend in cash flow from operations, but also from its operating profit margin. And finally, I wanted to look at valuation. And C3.ai is trading at a forward price to sales of 8.9, which is quite expensive in my opinion for a company with this kind of performance. Lackluster revenue growth in the last year, worsening operating losses, and only cash flow from operations showing improvement. So with all that being said, if I had to say the stock is a buy, sell, or a hold, I would say it's on the borderline between a hold and a sell. It's nowhere near being a buy, in my opinion, just yet. I would like to wait and see how those trials are turning out with its clients and see how much of those trials turn into long-term contracts for C3.ai and whether or not those long-term contracts are done profitably. And I want to see demonstrated improvement in profit margins. So for now, no, I don't think C3.ai stock is a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.